Income Tax 2020. Self-employed SEP, SEP, simple and qualified plans. Come in, relax with Income Tax 2020. Self-employed SEP, simple and qualified plans. When thinking about the income tax equation, we're going to be looking at basically the second line item here, remembering that we could basically break out our income tax equation into two halves, one half being the modified income statement, the other half being the calculation of the tax, and then the application of credits, payments to get down to the tax refund or amount due. We're basically focusing up top on the top half, income statement half. In previous sections, we discussed what would be included or not included in the income line item. Now we're talking about what I would call the above the line deductions or the adjustments to income, those being in contrast to the below the line deductions or the deductions after adjusted gross income, which would be either the standard deduction or itemized deduction. So we're up top here, adjustments to income. We can call them above the line deductions, Schedule 1 deductions, or adjustments to income. So we have our 1040. We're focused in on the 1040 down here on line 10 once again. And that line 10 is going to be pulling from the Schedule 1. I know this form's a little bit small here. We're going to be actually seeing it in more detail in a future presentation or the next presentation, which will be in the tax software. So we'll have more detail there. But we're focusing in on this line item number 15, self-employed SEP, simple and qualified plans. Now, this is another item that could be a great deduction, but it's basically tied to someone having self-employment income, usually that self-employment income or oftentimes it being from, say, a Schedule C. So once again, we have the Schedule C. So if you see something like a SEP or a simple, this is often something that's going to be like, could be tax planning opportunity and whatnot as well if you're focused into those types of businesses that have Schedule C type of income. And we'll discuss a little bit of that here. We might get into more detail of that in future presentations. Our main goal here is just to touch on these items that would be on the adjustments to income. However, in order to be here, you would have to have basically taxable income or self-employment income, typically basically a Schedule C. And therefore, if you see something on this line item, you might see something up here, and most likely will, on a half of the self-employment tax that's going to be deducted because you'll have self-employment income as well. So we'll go into some general rules for a SEP, and then we'll go into some general rules for a simple, and then we'll take a look at this in tax software in a future presentation. But the general layout is going to be this. We're going to say that if you have a W-2 job, then you would be reporting your income up top in line 1. One of the benefits that you can get from a W-2 job would be that they can provide you, if they so choose, a 401k plan or something like that, a retirement plan, which could have a huge tax benefit. Now, when you get that tax benefit, they take the money directly out of line 1 of the W-2 so that it's not included in income. Therefore, when you report your W-2 income, it wouldn't be reported up top. Now, if they do not provide a 401k plan and you work somewhere and you don't get a 401k plan, then that's a huge benefit you kind of lose, because really you'd have this opportunity to invest somewhere and defer the taxes and not have to pay them at this point in time, the year that it was contributed into the retirement plan. Therefore, oftentimes you might then get an IRA deduction in that case. The problem with an IRA contribution is that you would get this IRA that you could invest, and you'd get basically this deduction, which would act similar as if it was taken out of the W-2, meaning that you're kind of pulling it out of income, or in essence taking a deduction for it. But there's limitations to it that are more severe types of limitations, meaning it's capped, and therefore you might want to be able to put more money into it at this point and get a bigger tax advantage of this point, and so forth. So there, if you have a Schedule C type of business, then once again, you're not a W-2 employee, so you don't have access to, say, a 401k plan possibly, and you want to basically take advantage possibly of the larger amounts that you can put into some type of plan that would be similar to a 401k plan, but and so more than you might be able to put into an IRA. And you might, of course, if you have employees with the business, want to be able to offer the employees some benefits, but not wanting to take on the burden, because it's a lot of administrative burden to take on a full 401k plan or something like that. You may not be able to, and you may not, want to, because of the cost of administering it. So these are going to give you some benefits, which, like, even if you don't have any employees, they might give you a tax benefit and an ability to basically do tax planning and whatnot by putting money into a SEP or Simple, maybe more beneficial than simply putting money into an IRA, mainly because the cap might be larger as well, and they might provide benefits to the employees, but in a more simplified way, still giving benefits for a retirement plan similar to a 401k, but not as complex as a 401k and not basically requiring all the added kind of burden of administering a 401k. So that's the general idea. So let's go over a SEP. We'll just talk about it briefly. And again, you can look it up separately. The whole topic in and of itself can go into these, SEP or Simple or other qualified plans for smaller businesses. But we're basically mirroring something similar to a 401k plan, giving the benefits to ourselves and the employees, because remember, we are kind of like an employee according to the IRS, right? They see us, they're going to charge us Social Security and Medicare, so they see us kind of like an employee of the business. So we want to give our employees, including kind of like ourselves, the benefit of that you'd get from the benefits, such as a 401k plan, but not have the complication of the 401k plan. So a SEP, SEP, Simplified Employee Pension, SEP plans can provide a significant source of income at retirement by allowing employers to set aside money in retirement accounts for themselves and their employees. A SEP, SEP does not have the startup and operating costs of a conventional retirement plan and allows for contribution of up to 25% of each employee's pay. So up to 25% of the employee's pay, available to any size business, easily established by adopting Form 5305 SEP PDF, a SEP prototype, or an individually designed planned document. If Form 5305 SEP is used, cannot have any other retirement plan except another SEP. So no filing requirement for the employer. That's a huge, benefit. Again, it's going to be less on the costs that would be involved with regards to handling the administrative processes. Only the employer contributes. So only the employer is putting money into that. And that's kind of, again, pros and cons, a restriction to it. The traditional IRAs, SEP IRAs, set up for each eligible employee, and then employee is always 100% vested in or has ownership of all SEP IRA money. So they have the ownership of it. They're in 100% vested. How does the SEP SEP work? Quick example here. Jed works for a Rambling VP company. Rambling VP decides to establish a SEP for its employees. Rambling VP has chosen a SEP because the RV industry is cyclical in nature, with good times and down times. In good years, Rambling RV can make larger contributions for its employees, and in down times, it can reduce the amount. So it wants that flexibility of being able to put money into the SEP when it has the availability to do so. Rambling RV's contribution rate, whether larger or smaller, must be uniform for all employees. Now that's going to be one of course, kind of the restrictions. So you might be thinking, I want a SEP basically for because the IRS sees me as an employee and I want to have an increased amount that I can put into basically a retirement plan. But of course, if you have other employees, then you're going to have to think about, the uniformity or the concepts of putting the money into the retirement plan that have to cover all the employees that are required to be covered and the rules related to them. So the financial institution that Rambling RV has chosen for its SEP has several investment funds from which to choose. So you're going to put money into investment funds in a similar way as you would with basically any kind of retirement plan, typically mutual funds and bonds and whatnot. Jed decides to divide the contribution to his SEP IRA among 3 of the available funds. Jed, an employee, cannot contribute because SEPs only permit employer contributions. So the employer is the one providing the benefit and being able to choose and have the flexibility pretty much when they want to provide it or not. So good years, they probably would end up providing more, you would think, and then bad years, possibly not. Pros and cons: it's easy to set up and operate. Low administration costs, flexible annual contributions, good plan if cash flow is an issue. Employer must contribute it equally for all eligible employees. Employer contributions only. SEP contribution limits. Contributions an employer can make to an employee's SEP IRA cannot exceed the lesser of. So here's the limits. Right? How much can I put into it? How big of a deduction can I get? How much can I, how much benefit can I get from it? 25% of the employee's compensation, or $57,000 for 2020 and $58,000 for 2021, $56,000 for 2019. How about a simple? Again, we'll go into it just briefly here. You can do more research on these if these are something applicable. A simple saving incident match plan for employees of small employers. IRA plan offers great advantage for businesses that meet two basic criteria. First, your business must have no more than 100 employees who earned $5,000 or more during the preceding calendar year. In addition, your business cannot currently have another retirement plan. Advantages of a simple IRA plan. So simple IRA plans are easier than other plans to set up and run. Your financial institution handles most of the details. So once again, this is another attempt to make a retirement plan flexible for small businesses while still providing the benefits to the business owner, because they're basically thought of as an employee, and the ability for them to provide it to their employees without taking on the administrative burden and risk involved with it, like a larger retirement plan like a 401k plan. Employees can make tax deferred contributions through convenient payroll deductions. You can choose either to match the contributions of participating employees or contribute a fixed percentage of each eligible employee's pay. So you have some inflexibility here. Once again, you can choose either to match the contributions of participating employees. So the employees putting money in, you can match that, similar to what you might see in some 401k plans, or contribute a fixed percent of each eligible employee's pay. Administrative costs are low. You are not required to file annual financial reports. So once again, huge benefit that you have a little bit less reporting requirement than you might have in a full like 401k type plan.